In this example video, we're going to look at review exercise 4-2, and we're going to put together the current assets section of our balance sheet. So they tell us that our company had the following accounts in its year-end adjusted trial balance: inventories, accounts receivable, accounts payable, prepaid rent, marketable securities, allowance for doubtful accounts, and cash. And again, they want us to prepare the current assets section of their year-end balance sheet. So when we're thinking about our current assets, those are assets that we planned to use, sell, or convert to cash within a 1-year time frame of the balance sheet date. So for example, things like cash, marketable securities, inventory, accounts receivable, all of these items would be considered current assets for us. When we're looking at the list that was given to us, we can see that accounts payable is listed. And although it's a current item, it's not a current asset. It's a current liability. It's money that we owe. So that would not be included here. In your current asset section, your assets are listed in order of liquidity, meaning what you can convert to cash the fastest. Therefore, your first current asset is in fact always cash. So we have cash of $1,500. We also have marketable securities. And these are actually listed before accounts receivable because these are highly liquid items. So these are things like if we owned CDs or we own stocks that we could easily trade very quickly if we needed to get cash. When we're thinking about accounts receivable, yes, that's going to turn into cash for us eventually, but we actually have to wait for our customer to pay us in order to receive that cash. So it's a little bit less liquid than our marketable securities. Our accounts receivable, they tell us that we're waiting to receive $7,600. However, we know that we have to reduce that by our allowance for doubtful accounts. So we think that we will not collect $1,100 of that $7,600 that we are owed. So the net value of our accounts receivable, commonly referred to as the net realizable value, is $6,500. We anticipate being able to realize $6,500 of our accounts receivable into cash for our business. Inventories come next, and we had inventory of $23,600, and then finally our prepaid rent, our least liquid asset, because we technically can't convert that to cash, but we own it and we're going to be using it up in the upcoming year. So we sum those together to get our total current assets for the period. Goes into our total column on our balance sheet of $37,000.